In Q4 FY21, Eicher Motors profit was up 73%, while the revenues were a beat to the market expectations. Operationally, in terms of EBITDA, the company performed really well, and they also informed that financial year 22 can see the highest ever new model launches in a year. And to talk more with the details on numbers, future strategies and demand outlook for the industry, we were joined by the Whole-Time Director and CEO of Royal Enfield, Mr. Vinod Darasi, for an exclusive conversation only on ET Now. In the interview, Mr. Darasi started sharing his views on how the second COVID wave is different from the first one, and he says that this second wave is definitely much worse than what the first wave was, given the fatality and the cases, but businesses have now learned to take action ahead of time. On the supply side, that still remains a little bit of issue because supplies are also struggling given the second wave of COVID-19. But going forward, he expects to see significant decline in the number of cases in the next 1 to 2 weeks, and vaccination is the only way out. On the ongoing commodity inflation, he says that the company did offset the higher commodity cost with the 3 to 5% of the price hike taken by the company, and also to fight this commodity inflation cycle, they did a lot of work to reduce the consumption of the precious metals in their bikes. This was seen especially in the case of rhodium. On the demand front, the positive comments were the likes of that they are seeing pent-up demand in the international markets because rural market there has been a hit, but the order book for the company is fairly full right now, and they just need to ramp up the production going forward once these COVID-related restrictions start to ease out a bit. They are hopeful to recover or bounce back faster than the last year, which was quite really positive. Now that we see that the company has been taking the price hike and expecting good demand in the future, when we asked about the margin expectations of the company, so Mr. Darasi was of this view that 20% is quite low and 30% is quite high, because the company has been maintaining this range of the margins, and going forward he says that the company aims to maintain the margins somewhere in between 20% and 30%. On the product launch commentary, the company says that 2021 is truly going to be a challenging yet super exciting year as the company is launching and coming up with many new products. And in the business segment contribution, the company says that they are targeting around 20% of the revenue from the non-motorcycle business, and that could be lucrative as well in the terms of margins. But after selling the motorcycle, they just don't want to sell the motorcycle, but going ahead they want to participate in the riding experience of the customers. So that's why company has its focus on the various accessories and outfits and lot more to give a personalized experience to the rider. On the future strategy, the company says that by year 2025 and 26, they are hopeful to get around 20% of the revenues from the overseas market. Let me tell you that currently for Royal Enfield, the company has been clocking around 8 to 9% of their revenue from the international markets, and Vinod Darasi do highlight that the international markets, the margins are quite high. So going forward, if we see that 20% of the revenues coming from the overseas could be a margin uptick for the company. They are also targeting the new markets, and they are currently working on 3 things. Firstly, they want to grow in the international markets. Secondly, they have focus to grow in the non-motorcycle revenue. And thirdly, they are planning to come up with more and more launches in the Indian markets to combat the erosion in the margins. Lastly, commenting on the current financial position of the company, they do admit that the company has now more than $1 billion cash in their books, and that's continue to rise. All the 3 options, that are new acquisitions, whether it's a capex plan or the company can plan to give it back to their shareholders in the form of dividends, are available to the company. But for now, this amount of cash in their books is making them to hold a strong financial position. So these were the highlights of the exclusive interview and exclusive conversation with Mr. Vinod Darasi we had today on ET Now.